A solid routine is essential when it comes to managing an investment portfolio. It has to be simple and sustainable so you don't end up bouncing around between different approaches, which just leads to burnout and you giving up, which is a real shame. There is no better way to see excellent tax-free growth on your money, especially here in the UK, than investing in the financial markets. So you don't want to give up on this. You just want to get better. So a good routine is one that you will stick to, fits seamlessly into your lifestyle and gets you results. And I'm going to show you exactly what a good routine looks like in today's recording. So if today's video helps you up your investment game, don't forget to like, subscribe and hit the bell notification. My name is Sahir Anwari. I'm the co-founder of SublimeTrading.io. We have helped hundreds of private investors over the past 10 plus years profit from trends in the markets through our simple to learn methodology. I also write for a number of publications, including Benzinga.com, and I'm regularly invited to guest speak on how everyday people can skyrocket their stock performance, focusing on the next 3 to 5 years. So here's a tip for you. A good routine starts at the weekend. Why is that? Well, this is when the markets are closed and you can take your time analyzing the markets. And generally, everyone has time at the weekend to dedicate to what is important. And arguably, there is nothing more important than your financial future. With experience, you will have your weekend routine down to an hour, maybe 2 at the max. This depends on how the markets are performing. The busier the markets, the more time you will require. So what does this routine involve? Well, it is a simple 3-step process that I have been using every weekend since I started investing back in 2007. It is a process that removes all the noise and opinions on our social media and mainstream media channels and focuses me on the most important indicator of all, the price of the asset. This is the same process I use across UK and US stocks, commodities and currencies. In simple terms, it is a filtration process that starts with over 8,000 assets across stocks, commodities and currencies at the top of the filter, and an hour or so later I end up with the 5 to 10 assets that I watch for the week ahead and that have the potential to make it into my portfolio. These are the best high probability assets the markets have to offer. Now, because I spend an hour or so at the weekend doing my analysis, Monday to Friday takes me a few minutes each day to manage my portfolio at the start or at the end of each day because I know exactly which assets I'm looking at. This is an approach that is sustainable. As I've said, I've been using this approach well over 10 years. It also gets the most out of my hard-earned money as I'm always finding the very best assets based on price action and not opinions on social media and our mainstream media channels. And it means I can get on with living my life without being glued to my screen all day. So what are these 3 steps? Well, let's switch over to the slides and we can go through this in a lot more detail. Okay, so my weekly routine, let's break this down. Well, first of all, let's refocus on the goal. The goal every weekend is to filter through the 8,000 plus assets that are available to us through the UK stock market, the US stock market, commodities and currencies, go through a analysis and filtration process. We've broken ours down into a 3-step process, which I'm going to explain in detail as we go through today's recording. And we want to end up with the very best 5 to 10 assets that the markets have to offer that can potentially make it into our portfolio. Now remember guys, these are the very best 5 to 10 assets based on what the markets are telling us, not based on our opinions, not based on what analysts online are telling us, not based on the most talked about assets or in your favorite social media platform or group. It's based on what the markets are telling us. Now there's a saying here, in case you haven't heard of it, good investing, sound investing involves ignoring opinions, including your own. This is something that people really, it's a concept that people never tend to grasp. Good investing is based on what the markets are telling us. Good investing is based on the markets telling us which assets have the highest chance of returning a profit. Bad investing is listening to your opinion. Bad investing is going online and finding assets that everyone is talking about, getting caught up in that noise, and then making decisions based on that. There's no longevity in that approach, and there's certainly no profit to be made in it. You want a process that's based on the markets dictating these are the assets that you want to be focusing on for the next week, next year, so on and so forth. So that's the goal. The goal is to go through this filtration process every weekend and find the very best 5 to 10 assets that have the highest chance of returning you a profit. And those are the assets you monitor throughout the week. Now, as I mentioned earlier, with time and experience, you will have this analysis process down to an hour, maybe 2 hours, depending on how busy the markets are. If the markets are in full flow, it may take you a little bit longer. If the markets are quiet, it may take you half an hour to an hour. It depends, again, on what the markets are doing. But when it comes to your portfolio and looking after your financial future, you have to dictate whatever the markets are telling you to dictate. And in time, as already mentioned, 2 hours max, never more than 2 hours. Okay, so step one is using scanning software. Now, there are a large number of scanning software out there, some free to cheap to the absurdly expensive. The reality is, guys, that every endeavor in life, every career requires the right tools for the job. If you look at your career, you went through an education phase, and not only have you gone through an education phase, you've had to learn the right tools for the trade, and you've also had to keep on top of those tools. So as time has gone on, those tools have evolved, they've got better. You've had to learn how to use them, you've had to get better, and because of that, you've stayed longer in your job, or you've offered a better service to your clients. It's the same with investing. You've got to start with the right tools for the trade. You've got to learn to use them, and then you've got to evolve as those tools get better. Now, you may be watching this and going, oh, I can't be bothered with that. Well, I mean, first of all, that's a bad attitude. Secondly, if it is important, you will learn. And thirdly, learning all of this stuff is extremely simple. Because there's so much information out there, it tends to get cluttered with all the misleading information that's plastered all over the internet. But if you filter that all out and really focus on what works, you will understand how to use all of these tools and how to put a portfolio literally within hours. Good financial literacy doesn't take years, it takes hours. You just need to have access to that right information. And this is hopefully what you're getting through the videos that we put out on YouTube. So you've got to start with the right scanning software. Here at Sublime Trading, we've been using Metastock and eSignal for many, many, many years, going all the way back to 2007. And the reason why we use these is because simply as a combination, they are phenomenal tools. They cost money. We've been paying around £350 a month in combination for both of these tools. But it is well worth the investment. Now, I'm not saying go out and rush and buy these tools. If you go down into the description below, click on the link, complete the scorecard. At the end of the scorecard, you will get access to the Hot Stocks Vault, free for 30 days. And you will get the 10 best performing stocks every week. So this 3-step process that I'm showing you today, we do that for you for a fraction of the cost of the scanners. But as already mentioned, these are very much needed. And it's because we have these scanners that we consistently filter out the very best tools that, the very best assets the markets have to offer. So Metastock and eSignal. Now, some of our scanning criteria that we look for, and if you're a regular to our YouTube channel, you will already be familiar with some of this criteria. Above or below the daily and weekly 200 simple moving average. If they're above the 200 moving average, we're in a bull market. Below, we're in a bear market. So by consistently scanning for assets above and below, we get a very good idea of what kind of markets we're dealing with. If the majority of the markets are above the averages, we're in a bull market. If the majority of the assets are below these averages, we are in a bear market. If there's a combination of above and below, then we are in a sideways market, and the market's still deciding which direction it wants to go in. And if you look at the S&P 500, it's above the 200 moving average on the weekly, below the 200 moving average on the daily. So we are kind of in that neither bullish nor bearish territory at the moment. Volume over 1 million. This is when it comes to stocks. Stocks with volume over 1 million means that there is an attraction to that stock. People want to buy that stock, and that means that the stock has a very high chance of performing. So stocks over 1 million is something that we scan for. In a breakout market, we look for stocks that are printing new all-time highs, because as mentioned in the previous recording, if an asset is printing new all-time highs, it has a very good chance of just performing very well, because there's no resistance ahead of price. A resistance level is something where a bull market is a level where a price in a bull market will head towards and then reverse into a bear market. When an asset is printing new all-time highs, there's very little in the form of resistance that can push price back down again. So stocks printing new all-time highs are phenomenally profitable. And in a pullback market, excuse me, the typo there says pulling back market. In a pullback market, we look for price that has pulled back to major levels of support and resistance. So this is some of the criteria that we scan for. The result of step one is as follows. We go from over 8,000 assets from the UK, US stock markets, commodities and currencies to 50 to 300 assets approximately. This is a much more manageable list. Going from over 8,000 assets to 50 to 300 assets at a click of a button gives you a much more manageable list. So that's step one taken care of. We use our scanners to go from over 8,000 assets to a much more manageable list. Now, step two is where our bespoke charting tools come in. Again, if you're a regular to our channels, you will see the tools that I use to analyze the assets. These are our bespoke charting tools that we have developed. The software that we use is TradingView. Now, why do we use TradingView? TradingView is browser based first and foremost, so you can access it anywhere in the world as long as you have an internet connection. A lot of software that we've used in the past have just been for PCs and you've had to download them, and some of them have been absurdly expensive. You know, we spent thousands of pounds on some softwares which we still use, some we don't use, but it's very, very expensive. You're thousands of pounds down before you've even started getting involved in the right way to invest, and you don't want to start off on the back foot. TradingView is a great bit of kit. It's browser based, it's extremely well priced. It's about £300 for the year, and it allows you to develop tools. Again, we've done all the hard work in terms of developing tools. You've just got to learn how to use them. So to access them, complete the scorecard and come through to the Hot Stocks Vault, where you will get access to some of our tools. Now, the analysis is conducted across the monthly, the weekly and the daily time frame using our bespoke tools. And first of all, every asset, those 50 to 300 assets, has to go through what we call our high probability trigger checklist. Every asset has to meet this checklist. If it doesn't meet this checklist, we simply put it to one side and say, right, that's not for today. Now, again, a lot of this criteria I've covered in previous videos. For example, on the monthly time frame, for a bullish bias, we're looking for assets above the previous high. So we've got an acronym there, PYHL, which stands for previous high, previous or previous low. So if an asset's above last year's high, it has a bullish bias. If an asset is below last year's low, it has a bearish bias. We also look for a history of trend. If an asset has performed well in the past, it's likely to perform well in the future. On the weekly time frame, we look for the assets to be trending above the 200 and the 50 simple moving averages in a bull market, below these averages in a bear market. Same on the daily time frame. We've got the 200, the 50 and the 20 simple moving averages. We want the asset to be above those averages in a bull market, below those averages in a bear market. Now, when you've got 50 to 300 assets, you know, if you've gone from 8,000 assets down to 50 to 300 assets, it's much more manageable to quickly go through a list of 50 to 300 assets and go yes, 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 no, 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 and go from 50 to 300 assets to a much shorter list. Again, it takes time, it takes experience, you have to get your eye in, but ultimately once your eye is in and you become good at this stuff, it's really, really simple to find the best performing assets the markets have to offer. Now, there's a very specific filter that we apply in step two, and that is we look for a history of performance. And specifically, we focus on the monthly time frame. We open up the monthly time frame, and if the asset has performed very well in the past, then it's very likely to perform well in the future. And what we're looking for are periods of trend. If an asset has trended, a trend is where a stock has a sustained direction to it, either bullish or bearish. Stocks on the whole generally have bullish trends because most stocks, good stocks, they move up. Of course, there's corrections and downways periods and sideways periods, but generally good stocks move to the upside. So if a stock has got a history of performance, Microsoft, for example, MSFT, have a look at Microsoft. It has a phenomenal history of performance. So if that repeatedly gets picked up by our scanners, then we know it's trending, and it's definitely one for the portfolio because it has a history of performance. And I already mentioned, if it has trended well in the past, it's likely to trend well in the future. This is really the foundation of good analysis or technical analysis. And this is what makes technical analysis far simpler to execute than fundamental analysis, because the technicals tell you very clearly whether the stock will perform or not based on its history. And the way to do this, guys, is to eyeball the chart. There's no easy way of going around this. You have to be able to open up the monthly time frame, eyeball the chart, look at it and go, yeah, I like the look of this, or no, I don't. And this is where that 1 hour to 2 hours really comes in, because it does take a bit of time. But as already mentioned, you will quickly go through charts, because once your eye is in, you will instantly be able to recognize what is a good chart and what isn't. Twitter, for example, is a very bad chart. I'm giving you some tips here. Twitter, despite everything that's going on around Twitter, Elon Musk, etc., Twitter is an extremely bad stock to be wanting to invest in. Compare that to Microsoft and you've got a stock that has a very good history of performance. So the result of step 2 is that we go from 50 to 300 assets using our bespoke charting tools down to a much more manageable list of 20 to 50 assets. So you can see how through this filtration process, we're consistently working our way down in a very logical and systematic way down to those 5 to 10 assets that are making it into our portfolio, ignoring the news, ignoring social media, ignoring your opinions, other people's opinions, focusing purely on the chart. Okay, then step 3, further refinement using our bespoke charting tools. This is where we take those 20 to 50 assets and go down to the 5 to 10 assets. And again, the way we do that is simply refining further which ones have the best history of performance. So out of those 20 to 50, well, we did like them at the first glance. We like them. Yeah, they look good. They look good. Made that initial 20 to 50, but we then take those 20 to 50 and do the same process again, but become very, very picky with those final 5 to 10 assets. And that, guys, is the 3-step process. Now, on a final note, once we've made those 5 to 10 assets, we then like to put those assets into a spread betting account. Here in the UK, spread betting is free of capital gains tax. You've heard me say this before. If you're a regular, if you're new and you're based in the UK, you must learn to use spread betting accounts because they're free of capital gains tax. If you're outside of the UK, you have something similar, which are called CFD accounts. We also have CFD accounts here in the UK, but outside of the UK, you will have CFD accounts. Functionality is very similar to spread betting accounts, but of course, you will have to be aware of the tax laws of your country. Now, there are a whole number of broker accounts out there. Some are good, some are great, some aren't so good. We have the broker accounts that we like to use. And a previous recording, I've covered spread betting and what makes spread betting accounts so powerful. So make sure you watch that recording. Okay, now let's switch over to TradingView so I can just give you a visual idea of what this filtration process looks like in terms of stocks lists. Okay, so this is my 3-screen setup. I have the monthly in the top left, the weekly in the top right, the daily down here across the bottom. This is the same setup I've been using since 2007. And it's the same setup that I use to analyze stocks, commodities, and currencies. This just does not change. On the right-hand side, you can see scanned list 1. This is where I have used my scanners to go from over 8,000 assets to create an initial short list of around 50 to 300 assets. This list has around 350 stocks. So a pretty big list based on our scanning criteria that we plugged into the scanners. And then using our bespoke charting tools that I have here in front of me, I then move on to the scanned list 2. So I'll just move on to the next tab. You can see scanned list 2. This is step 2, and this is now a much more manageable list of around 50 stocks. So we've gone from over 8,000 assets to around 350 assets in step 1. In step 2, I took those 350 assets, used my bespoke charting tools to go down to an initial short list of around 50 assets. And then if we move on to the next tab, you can see the final list. Out of those 50 assets that I shortlisted, these are the 3 best looking stocks the market currently has to offer. It's not a very big list, and that's because of current market conditions. The S&P 500 is still going through a correction. The stock market as a whole is still going through a correction. But based on that, there's still a few gems the market is pumping out. And these 3 are 3 stocks that are now on our watch list. Okay, guys, I hope you found that useful. I hope that really helps you to get an idea of what a good investment routine, trading routine looks like. Where do you go from here? Go down into the description below, click on the link. The link will open up into this scorecard. Are you ready to skyrocket your stock performance? Take the scorecard by clicking on this button. It will take you less than 2 minutes to complete. At the end of the scorecard, you'll get an excellent report breaking down your performance and the steps you need to take going forward. And in addition to that, you'll get 30 days free access to the Hot Stocks Vault, where we do all of this scanning for you. We take care of the costs of the scanners, and we provide you with the 10 very best stocks every week the market has to offer. See you in the next recording.